Okay, in the last video, we talked about basically an operating cap rate. We used the example of an apartment building that was priced at $1 million or sold at $1 million, and it was generating an annual net operating income of $100,000. Well, that $100,000 divided by $1 million purchase price equals 10%. But a trading cap rate is essentially a level of risk that is getting assigned to a specific area or a specific asset in that area. So that means that if an investor sees an area as more risky, they're wanting a lower purchase price for the same in-place net operating income. But let's use that last example. Let's say somebody bought this apartment building a couple years ago at a 10% capitalization rate. They paid $1 million for an in-place $100,000 a year annual net operating income. Now let's say that area is improving. Coffee shops are moving in, restaurants are moving in, and jobs are moving in. Maybe that person cleaned up the asset and put better tenants in it, and they want to sell it again. Well, now maybe properties in the area are trading at, let's say, an 8% capitalization rate because investors are seeing as assets in that area as being a little bit less risky. So if that person was to turn around and sell that building, let's say it was the same exact in-place $100,000 a year net operating income, but now properties are trading at a lower cap rate, let's say 8%. That means that investor could turn around and sell that asset, even though the net operating income is exactly the same, for a higher price for $1.25 million. That would be the in-place $100,000 a year in net operating income, now divided by 8%, which is the new cap rates that properties are trading at in the area, and he just sold the property for $250,000 more. So the way to think about trading cap rates, again, is this. If you're buying properties at a lower cap rate, that means you're willing to accept lower cash flow for the purchase price because you see it as less risky. That's why when you hear people say, I'm buying a property at a 6% cap rate, they're getting a premium. But if an area goes the other way and it gets more risky, maybe it slips to an 8% capitalization rate. That means new investors coming in will actually want to pay less of a purchase price. So on the trading cap rate, lower trading cap rates means higher purchase prices. Higher trading cap rates means lower purchase prices. Thank you very much.